Are you looking for ways to save tax in your business and personally? Follow my video for more. If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. When you're a business owner and you've been in business a while, I think sometimes it's easy to get complacent on ways to save tax. So you may have done a really good job of it to start off with, but as years have gone on, have you stayed up to date with the reliefs? Have you stayed up to date with the opportunities? Are you claiming everything that you can do to reduce your tax to as much as legally possible? Are you? Follow my video and let's explore some of these areas. Number one, use of home as office. Are you making the claim for you? Now, during the pandemic, we had working from home thrown on us where we was all locked down. And now that's become a lot more way of the norm, where people are working in their offices less. So if you are working from home, are you making a fair use of home as office claim within your business? Now be careful, there are things to be careful with this. One is if you claim too much or you do it in the wrong way, you could lose the capital gains exemption on your house. So while you want to claim the fair amount of use of home, make sure it's not coming at the expense of another relief. Are you claiming yours? Trivial benefits. If you've got a team, there are opportunities where you can pay your team members via trivial benefits. So this could be for little rewards of giving potentially Amazon vouchers to your team, and these are free of tax for them personally. Now, who doesn't love to receive a little bonus for a well done that is tax free? So have you explored trivial benefits within your company for your team, and are you making the most of these for you? Salary and dividends. So are you taking the most efficient way possible of taking the right amount of salary for your business and the right amount of dividends? So are you planning for this every single year in advance? And are you keeping an eye to make sure that it complies? And are you keeping an eye on the tax legislation? So make sure this is being reviewed every single year so it is as efficient to you and the business as possible. Number four, is your mobile phone in the company's name and are you claiming it as a business expense? Now, a mobile phone, we all attach to them now in the current business world, and they are becoming an ever more increasing part of your business. But are you claiming the mobile phone within your business and is it in the company's name? If you're not, this is an opportunity where you can save tax. Number five, electric cars. Now I think there's a business decision to make on these as well, because electric cars are amazing tax relief because you get all of the tax relief up front. Now, in the short term, I think this is going to change where they'll start to tax electric cars more as they become more commonplace. But as we stand here at the moment, electric cars are fantastic for saving tax. Now, the downside of this on a business point of view, and if any of you know me or you know my clients and what they think about me, I am not knowledgeable about cars. But what I do know is these cars may be amazing, but how long is the battery life? And if the battery life doesn't last long, what impact will that have on the value of your car? So when you're looking at electric cars for your business, I think you need to bear two things in mind. How great would a battery be, which will affect the long-term value of the car, and also how good is the tax relief in the tax year you are claiming it. At the moment, it's brilliant, but I think this is going to change. Point number six is pensions. I talk about this a lot. The entry that you save on tax for this is amazing. It's over 50%. So as long as you've got available money within your business and you're not bleeding it of capital, are you making enough pension payments? Because you as the director can put £40,000 into a pension every single year. Now, if you're getting a 50% tax saving on entry, this is massive. Are you making the most of yours? 7, relevant life policy. What is that? A relevant life policy is where you can get your life insurance paid for by the business. I think that's amazing. If you're a high rate taxpayer, you won't be paying the 32.5% dividend tax, and the company gets 19% corporation tax relief. Now, in basic terms, that means you are getting 50% discount on your life insurance. And what's even better than that, if there is any payment, and let's hope that there's not, that payment will be paid to who you nominate free of tax. This is a massive opportunity that every business owner should be taking advantage of. So have you got relevant life cover going through your business? Is it at the right level? And are you making the biggest advantage of this opportunity? Point number 7, enterprise investment schemes. This is for you personally, and this is for your after-tax income. Enterprise investment schemes are really attractive from a tax point of view. What money you invest gets 30% tax relief up front. Now that's massive. So for every 10 grand that you put in, you are going to get a 3 grand refund on your self-assessment. That's pretty significant. And if they're qualifying companies and they last for more than 3 years and you get paid out, they are tax-free. Now, one thing to bear in mind with enterprise investment schemes, they are truly high risk. So make sure that the risk level is suitable for you and you've sat down with your financial advisor to make sure these are suitable. Point number 9, venture capital trust. These are again personal. So you get tax relief on entry going in. Normally you will receive dividends throughout the year, which will be free of tax, but they're in another wrapper where they are amazing for tax. Now again, VCTs are in the same bracket as enterprise investment schemes. These are truly high risk, and yes, you can lose your money, although you would hope with any investment it would make a gain. But I cannot stress highly enough how risky these are. So make sure again, in the same way with enterprise investment schemes, you are sitting with your financial advisor to make sure this strategy is best for you. But the tax relief on them are very attractive. Point number 10 is interest on your director's loan account. So if you've got a credit balance on your director's loan account, which means that the company owes you money, you can charge interest on that balance. Now, what's amazing at the minute is base rate has gone up quite significantly, and they're forecasted for base rate to go up even higher. That means you are allowed to charge a commercial interest rate on this balance. So recently, it will be at the highest rate that you'll be able to do for a very long time. Interest that you charge is deductible by the company for corporation tax, win. But also on your self-assessment, you will only pay income tax on the interest balance. And for some of the interest, you can earn a certain amount tax-free without paying tax. So number 1, have you got a credit balance on your director's loan account within your company? And number 2, are you making the most out of this income? Because it's something that I think is really attractive. I know this can be quite a lot to take on board, but we do regular tax reviews with our clients. With the fees that we charge, if we don't triple your investment, we will pay you your money back. But before that, if you want to jump on a discovery call with me, you may want to find out more about this service. You may also have a few questions. I'll be happy to have a call with you to discuss further. I promise there'll be no pushy sales pitch, and I'd look for you to end that meeting with value.